So my name is Peter Chege, Head of Product Development and Innovations at AIB Access. Today we are going through international stock trading. Last Wednesday we went through NFC trading and we covered, for the last two trainings, we covered bull market, bear market, and also covered how to select stocks. Today I want us now to see how you can grow wealth in international markets, and if you are risk averse investor, how you can grow your investment in terms of capital growth. So there are two things you look at the market. Either you're looking to grow your portfolio in terms of profits, or you are looking to grow for wealth. So today we'll see how to pick the right global investment, and hopefully by the end of this session, you have learned how to invest in the stock market, both international. I will also briefly go through NSE investment. If you have any question, please put on the chat. So for those who are new in global market, international shares is where you buy international stocks for different companies and you become a part owner of that company. So if you buy shares in Apple, Nvidia, or other stocks like Alphabet is also Google, you become a part owner of that company. The same way it works in NSE. When you buy shares of Safaricom, KPLC, you become a shareholder. It's the same thing that happens in international stocks when you buy global stocks, that is international shares. So let's say you buy Apple, which deals with iPhone. You become a part owner of that company while still residing in Kenya. So every time that company performs well, remember your shares also increase in value. So let's take an example, Apple. You are an investor, you have bought shares. If they are doing sales on iPhones, Macs and iPods, if they make profits, you are also making earnings as an investor. Remember, the price in the market will also grow. When the company grows, price also appreciates. Tesla, they do electric cars. The ones I think you have seen, buses and also taxis and also other vehicles which are electric powered. They are from Tesla, most of them. So when Tesla grows, your shares also grow. How does it grow? If Tesla is making revenue and their revenue they are growing, their price in the market also appreciates. The same thing that happens in NSE. I think in the last training, we went through how shares help you. If a company grows, you're also growing the shareholder. Remember, when you buy shares in a company, you are becoming a part owner. So when shares improve, when a company improves in revenue, shares price also appreciates. There are companies which decide when a company grows and they make enough profit, instead of reinvesting all the profit, they share it with you in form of dividends or bonus shares. So when a company grows, you as the investor, you're also growing because you are part owner of that company. Microsoft, I think all of us, we know what they do. They're the ones who provide the operating system for laptops. Operating system is like when you open a computer, it's a Windows. That comes from Microsoft. If you're using Office, that is Microsoft Word, Microsoft Excel, Microsoft Access, and other Microsoft products like Cloud, that is Microsoft OneDrive. For those who always share the documents through OneDrive, those products, they come from Microsoft. So when you buy shares in Microsoft, you are becoming a part owner of that company. If it keeps making profits, then you as the investor, you either gain two ways. Through price appreciation, which is capital gains. And for you to realize capital gains, you have to sell shares. Same as NSE. If Safaricom increases in price, unless you sell, you never realize capital gains. The other way you make money at both Global and NSE is when some of these companies, as you see, when they make profits, they decide to share it with you as a shareholder, either in form of cash dividend. In NSE, it is sent directly to either your M-Pesa or bank or check, depending on the mode you selected. In international markets, however, it is posted back to your trading account. So if you have a balance in your account, it increases as the dividends are being posted. You can decide either to withdraw or reinvest. So basically, if you look at an analogy, when you're buying shares, it's like you have a tiny shop in US, but you are still in Kenya. You don't run that company, but when it makes profit, then they share that part of profit either with you, or if it is a growth company, they invest that profit for growth, but share price appreciates. As you see, international markets, both also in NSE, there are two types of investors. There is those investors who are looking for growth in terms of portfolio valuation. That is price appreciation. There are those who look at wealth building, especially those who are about to retire, and also those young investors who are looking forward to their retirement. You start building your wealth such that by the time you are retiring, you are either making money through sale of shares, which means you are offloading your shares maybe in 20 or 30 years and make gains, or you are looking at holding at those shares. When you retire, those shares start giving you dividend. Remember, for dividend, you don't sell shares. You're only receiving free money that is sent to you. So those are two types of investors. And I would like, when you're investing both in NSE and international market, you differentiate the two. Growth investors, they usually buy low, sell high. They make through capital gains. Same thing in international markets. When you invest as a growth investor, you are buying when the market is low. When it goes up, you sell. You go to another count. In between, before you sell, the share might give you dividend. You still receive it. As a wealth builder, however, you don't look at price appreciation. You look at what shares give you without selling. That is either dividend or bonus shares. Dividend is free cash to you. Always return it, reinvest. If it is bonus shares, it means you are given free shares in addition to what you have. So if you sell these free shares, it means it's the profit you are taking. Remember, you have not sold the original shares that you had. Again, these free shares, it could be in a company that is giving you dividend. You are still receiving free money from free shares from the shares that you bought. Again, you are receiving free money in form of dividend from free shares that you received as bonus from the shares that you used your money to buy. So how does that help you? You bought shares, you got free shares. When they appreciate in price, you can decide to sell. Or if this company now decides, instead of reinvesting our profit, let's give it as cash dividend. It will be paid to you. So for those who have been concentrating much on capital growth, there is something we always forget when you sell. These companies which are growth, they reinvest the dividend back, but price keeps on appreciating. But there is a time that price will reach at the ceiling level. What does that mean? This company will no longer be reinvesting their dividend. their profit, they'll be giving us free cash. What we are seeing with EABL, BAT, and Akina Stanchart. Those companies these days, they give much of their profit to shareholders because they reach a point where they can't grow more. BAT, what else can they do apart from now innovating across smoking zone, which again, it has health hazards. Then you have the ABL. What can they innovate beyond that? We have other companies that are coming in, competing with them. Meaning what? The profit that they are making, instead of growing further, they decide, let's share it. Stanchart is a global brand. Instead of reinvesting their dividend, they usually share that with their investors. So is international markets. There are companies which focus on growth, meaning price growth. There are those that focus on reinvesting their profit, therefore price growth. There are those that decide we have reached to the maximum of the investment, or the profit they are making is enough to support their investment and also share a huge part of it with their shareholders, as you see. So when you buy shares, you are becoming a part owner of that single company. Remember, if you are buying shares, you are buying Apple, Tesla, Microsoft, Nvidia, Alphabet. Alphabet is also Google. And there are many more companies you can go buy in international markets. And there are always new IPOs coming. I'll come to stock analysis website where you can track all those IPOs. Then just confirm whether you can hear me. Brian, confirm you can hear me. Maybe those who are on the call, just confirm you can hear. Just confirm. Okay. Brian and Dan, confirm you can hear me. I wouldn't like you to miss anything. Maybe for those who can't hear me, just maybe you can increase your volume. I wouldn't like you to miss anything. Dan, confirm. Maybe you can increase your volume, or maybe you can put your earphones. I wouldn't like you to miss anything. Because the worst thing that can happen is when you invest in a stock market without information. Don't rely on social media. Rely on what a broker gives you. It comes from the market. So that's why I didn't like you to miss anything. Dan, can you hear me? Maybe you put earphones, or if you're on a laptop, maybe you can try and increase volume. And also Brian, I think we can continue. So when you buy shares, you are buying a specific company. Now we come to the next thing that is called ETFs, exchange traded funds. I first start with funds. What is a fund? A fund is where you put your money. Then the fund manager decides on what to invest in. We have money market fund. Those who have invested in money market fund, it's one of the best short-term investment you can do. So you give your money to fund manager. Most of the funds, they are managed by fund managers, and most of them in Kenya, they are insurance companies. So when you give them money, they will invest in whatever assets. Assets are just classes of investment options they can put in. For money market fund, they only are allowed to put in short term investment like It could be bonds, treasury bills, or even overnight trading. They are the ones who actually give market liquidity, but with a charge. And also banks, they also lend to banks. The interest they earn is what they share with you as a fund investor in form of interest. It is usually lower, and most of them they usually tell you they are not charging. But if you look at the fund itself, not the summary they give you as a performance. If you are to look at the fund itself, the way it performed, it's maybe 3 times of what they are giving you. So they usually make money through they usually called of most of them they usually put that margin between what the interest they are giving you and the interest they are receiving. We also have equity funds. Equity funds, you put your money, fund manager they go and decide NSE. You invest in these stocks, equity stocks. Also, there could be element of fixed income, which is government bonds. The return they get is what they share with you. Usually what they give you is lower than what they are getting, because again, they have bills to pay. Now, there are fund managers in the international market, I'm not talking in Kenya, who decides when people invest in this fund, they need their money. If they need their money, we have two things. One, we have our own fund that is cash that is ready to pay those who want to get out of a fund. Remember, these are equities which are listed. And there are those who decide, instead of us having that liquidity that we have cash, we can pay those who want to get out of fund. Let's list in an exchange so that those who want to get out of, who need their money, instead of us liquidating the whole, investment, let's list at an exchange. Let's say Nasdaq. So if Peter is part of that fund, he needs his money, he don't need to sell his pension to another person who wants to get into that fund. That's where exchange traded funds come in. They are managed by an asset manager, who most likely they are fund managers. Asset managers and fund managers, there is no big difference between them. They are trading in an exchange. Exchange is like NSE, stock market, Nasdaq, New York, and other exchanges. That's where exchange traded fund comes in. In this case, you have a basket of stocks that are packaged into one that are sold as one unit. Remember, shares, you're buying a specific company. If it is Microsoft, you're owning Microsoft directly. If it is Tesla, you're owning Tesla. In exchange traded funds, you have now Apple, Microsoft, Tesla, and other stocks packaged into one unit where you are buying as a single unit, all of them. A good analogy is when you go to a supermarket, you want to buy juice, you want to buy unga, you want to buy cooking oil, and you want to buy maybe yogurt and milk. You buy individually. Those are international shares where you're buying individual companies. ETFs is where all these yogurt, unga, cooking oil, they are packaged into one, put in a box or a paper, you're buying as one unit. Remember, when you're buying each as a unit, you are paying more. When you're buying as a package, you are paying less. It's the same thing with exchange traded funds. Many stocks packaged into one unit where you buy as a single unit, the same way you buy shares. They don't trade separately. You buy the normal way you buy shares. If you want like S&P 500, there is a VOO. It's one of them that tracks 500 top companies in US. You come and buy as one unit, but it contains what? Apple, Microsoft, Coca-Cola, Amazon, Nvidia, and the rest. You are buying as one unit. Whereas in shares, you'd have bought each and individual share, which is expensive. So exchange traded funds, just think of it as a basket of many stocks. So instead of buying one company, you're buying all of them as a package. Some of the examples, S&P 500 ETF, it tracks 500 biggest US companies. So if America economy grows, then this ETF is growing because it is these 500 companies which are growing inside that ETF. If one company goes up, like Apple, Microsoft goes down, it averages. You find you are not affected. It's not like when you are buying Apple and Microsoft separately. Apple goes up, you are gaining directly from Apple. Microsoft goes down, you are losing as Microsoft. For ETF, it usually averages. That's why ETFs, they are the most safest. We have Nasdaq 100 ETF. It tracks tech giants that trade as Nasdaq, the top 100, Google, Meta, Tesla, Nvidia, and others. We also have dividend ETFs. These are companies that give regular dividends. They are packaged into one. So instead of Coca-Cola giving you dividend directly, Johnson giving you directly, and others, this ETF collects that dividend and pays directly to you. So you find there ETFs that track economies, sectors, dividends, and others. We'll come to that. So again, an analogy so that you understand, going to supermarket, instead of buying one mango, which could be like Apple stock, buying another fruit like melon, which is Microsoft, here they are packaged as one, a bit of basket. If you pick that basket, if Apple goes by, if let's say Apple is affected, maybe it's spoiled. Remember, you have a melon and maybe a banana which you can eat, which is different from where you'd have bought each its own. So if Apple is spoiled and it's the one you had, then you have to throw it away. So that's how ETFs work. Basket of stocks bought as one unit. And always check what does that ETF track. As you come and see, and in the interest of this training, we have growth investors who are looking to grow in terms of profits. And there are those who want to build wealth. There is a difference between the two. We went through this in NLC. If you're looking for growth, you buy companies which are not giving much of their dividend, but they are growing in profits because of reinvestment of their profits. There are those who want wealth. Wealth means companies which are giving you dividend. But remember, these growth companies, when they reach their seeding, instead of reinvesting their dividend, they will still give you that part as dividend, maybe in future. A good example in Kenya, Safaricom. It's both a growth company and a dividend, but much of it is on growth. They don't give a high dividend, but they invest their profits in growth. There is a time Safaricom will reach and they will not be able to renovate again. It will transform to what we have with EABL, BAT, where they are giving much of their profits back to shareholder. Look at EABL. Initially, it used to be a growth where they used to expand. They would give small dividend. Those years, for those who are young, for those who are old, then after they had opened enough branches, then we had Kina Kiroche coming in, giving competition. They stopped innovating because in beer industry you can't innovate further unless you are coming with a different beer brand, and which I don't know it's which one. Huh? Already we have the pure bloods, gins and whiskey. We have the ones which are mixed with yogurt. Huh? Most of them, you know them if you drink. Huh? There are those that are now coming up with fruit flavored. Huh? I think it is the latest. Huh? Possibly we might see, because now we have right versions of beer, which is more of a diluted original beer brand. I don't think which one they can come up with, unless it is a beer that cannot remeasure you. I don't know how it will come. Huh? So that's the point where EABL have reached, where they can't innovate further. So the profit they make, they share with you. Safaricom, they're expanding. They're in Ethiopia. They have M-Pesa, which is growing. Data. Right now, they're innovating to partner with Meta, which owns Facebook, Instagram, WhatsApp, and also Threads. They want to bring that such that even from your SMS, you can chat with somebody who is in Facebook. Hopefully that is the idea. They are still growing. There is a point where they will reach and they stagnate. What do they do with their profit? They share it with you in whole. So that's how growth companies transform into dividend stocks, which help you grow well. So even in international markets, we have the same. There are companies which don't give much of dividend, like Nvidia, but they're investing in AI. Those are growth stocks. Coca-Cola, they can't innovate further. They give much of their profit back to shareholders. So when you invest in single stocks, international stocks, physical shares, fractional shares, you're investing into a single company. When you buy ETF, it's a package of several companies packaged by a fund manager or an asset manager who lists that in an exchange, Nasdaq, New York, and others. They sell it as a single unit. And now you understand between shares and ETFs. If it is not clear, please put on the chart. At the ETF, we have different types of ETFs. There are those that track a sector, AI, tech, like Nasdaq is more of a tech. S&P 500 is US economies. There are those that track dividends. We'll see that when we come to stock analysis. And for stock analysis, I want to be clear for those who may drop in between. Stock analysis focuses mostly on those people who are trying to build wealth. TradeView.com is mostly on growth investors. Why? In TradeView, they give you even those charts where you can track moving averages, which you as a growth investor, you want to see. Is this company overvalued? Is it undervalued? So that you buy when it is undervalued, sell when it is high. When you come to stock analysis, you are going into fundamentals. How is this company performing? Do they give dividend? So when you go into the next slides, I want that to be clear. Stock analysis, wealth builder. Trade view, those who want to grow. You can combine both. You will see at the end. So we go to the next slide. So why then do global markets matter to Kenyans? One of them is diversification. No? Instead of putting everything to NSE, and you know NSE, unfortunately, it's affected by politics. And it's a bit small. You have around 30 stocks which are active, 60 which are listed. Some of them they are already suspended. Again, there is bull run when prices are rising. Like now, we are on bull run where prices are just going up in NSE with a huge margin of 25% and above. What does that mean? There is a time it will reaches ceiling, prices will start going down. If they go down by 25% or more, then we are on a bear run. We did that on last Saturday. Bear run, bull run. All those videos are on my WhatsApp channel and also my YouTube channel. They are not on AIB channel. For one thing, if I'm training you as an AIB staff, there are things I can't tell you. How politics affect the market. That one I can't tell you at the AIB account. Because then I'm exposing AIB to politicians. I would want to expose Peter to politicians because either way, I know how they play the market. And I wouldn't like you to lose because of politics that play in the market. In international markets, we don't have those politics. That's why you need to go NSE, and part of it, you diversify in international markets. International markets, they are never affected by politics. Remember CMA in Kenya, they don't play politics. If they find there is politics in a certain stock, they will either suspend or require the politician who is involved to disclose. Let me give you a good example. Mumia's Sugar. We played politics, CMA just watched. It went to a point where investors, they are losing their valuation. It went below 1 shilling. From a counter that was trading 30s, it went to 1 shilling. CMA cannot sit and watch you lose money. They just suspend until those politics are done with. An investor, and in this case, Rai Sugar Company, the owner, Rai, wanted to invest in Mumias. Somebody just saw this as an opportunity to go to the court to stop him from doing that, which would have unlocked the capital that is already blocked. Now, with that court case, CMA can only wait for that court case to end. How long will it take? This year, Transcentury, they have a case with equity, a small case, but it's already blown out. There are politicians involved. It is already suspended. Again, investor money blocked. Remember, your number of shares never change. Look at companies like Eveready. Instead of government supporting them to grow, they're just there. What can Eveready do? They can even be a competitor of KPLC. Bring in batteries which you can charge with solar. Bring bulbs which you can charge with solar. Bring TVs which you can charge with solar. Bring fridges, cookers which you can charge with solar. It's them who are making this battery. What stops them from doing that? It only requires the government to support them. But this company will never innovate. I've not seen any innovation apart from remote batteries and wall clock batteries. Everything else is either on solar or electricity. How long will we wait? Until now, the companies which are developing these remotes and wall clock move to new technology. It means Eveready is put out. Will it ever grow? But look at the international markets. They move with trade. AI comes in, Nvidia is there. AI comes in, Meta is there. Google is there. Alphabet. Microsoft is there. And I hope NSE can start maybe a separate department that can always advise Kenyan companies. Let them move with technology because that grows NSE. That's why you need international market where market is moving every day. I can tell you like Nvidia, last week the price it was, and the price it was yesterday, it has peaked with around $5. That is around 600 bob. You can never see a stock in NSE that is moving that price. Especially now we have one share. Now it is moving with 1 bob. Kenya shillings. Here we are talking about $5 in a single day. That's how good international market is. NSE is just a small market, but hopefully the current CEO, because I've seen He's trying to revive the market. He can move it to a point where market grows beyond the prices where you can buy fractional shares. That you can buy a 0.1 of Safaricom, 0.1 of Eveready. Now try to buy a 0.1 of Eveready. How much will you even pay? How much dividend will you receive? That's why international markets, they give you a diversification. There are more options. Look at the prices at NSE. The highest they can go, 10% for international markets. The international markets, if you're an investor in international market, it requires you to be on the platform. Either trade stock analysis or any other site that is showing new prices. So that when there is a price spike, sell, buy when the market goes down. NS, it only requires a politician to make an pronouncement. The market will go south or north. A good example, KPLC. It used to trade at 1 shilling for quite a long time. Politicians who are in finance committees, they took that advantage, bought so many shares. Then what happened? After they moved out of, I don't want to name names, after they were removed from those committees, price shot up 10 times. What does that tell you? And it is immediately after. A company which was making losses, it is making profits, giving dividends. Does it mean the profits they were making were maybe cooked books? The same politician will wake up and start raising KPLC so that you as the investor, you put demand up, you want to buy. Prices goes up, he's making profit. He will buy, you sell his shares. Out of his 100 million, you make 1 billion out of. Then he leaves. You are left with a company that now we again prices go down. That's why diversification is very important. And CMA, as I've said, they never play politics. They see politics, suspend. International markets, no politics. Nvidia is on its own. Apple, they are on their own. And I wish our politicians could just think about investors. I gave in Wednesday's training a story about Mumias. Mumias, there was a time he saw trading, that is. And I made gains. Immediately I sold, I don't know what happened. Price 13, the next thing, 1 bob, suspended. From Western, instead of supporting that company, they actually say we are not providing sugarcane. That company goes to halt. Their machinery, they wear out. By the time government is reviving those, they need to buy more machinery. Even if government wants to do anything, that company cannot wake up because they have to buy more machinery. Again, when they buy that machinery, nobody wants to deliver. We want to import from out. KQ, we are going to festive season. People will fly out, fly in. Instead of using KQ, we go to other aeroplanes. Then how do you expect this KQ to make profits? They are paying salaries, they are paying other things. In the international market, you will never find politics or even investors playing with a company. That's why global markets, as a Kenyan, they matter to you. But remember, you need wealth and growth, as you see. Wealth, build it locally. Growth, as you see, build internationally. Then there is dollar exposure. Never be happy when Kenya shillings is winning against dollar. That is when the price is going down, as an international investor. Only be happy if you're transferring money when dollar is low. That is like now dollar is 129 or around 130. That's the time to fund. You're not incurring. When it goes up, it is the time to sell. You transfer money back in Kenya. So you are gaining two things. Price goes up, you make gains. Then you remember you are transferring now the same amount you converted at a lower rate, you're converting it at a higher rate. So those are two ways you make money in international market. Price movement. When dollar moves up, maybe that is the time price have gone up. When you are transferring back that money, the dollar is up. Kenya shillings, is it dollar? Dollar is up. Huh? You transform that into Kenya shillings. Huh? So when Kenya shillings rises against USD, your investment is actually increasing in Kenya shillings term. So when you sell and transfer, you have gained through capital gains, dividend, transfer that back into Kenya shillings. Again, dollar is up, make money. That's why international markets involve growth, not wealth building. Then you have access to global industries, big ones, and always check technology. It is changing. AI, who is not using ChatGPT? Google bad. Facebook, I think they already have their own. WhatsApp, I saw they are also integrating. Most of the companies these days is AI, and I hope they are not using AI to manage companies, because AI on the downside it can mislead you. Remember, it's a computer you are talking to. We have electric vehicles. We never thought our own matatus could use electric vehicles. It's just a matter of time. People move from diesel, petrol to electric vehicles. Softwares, they change every day. Look at NSE. Just give me a good example of electric vehicle company listed at NSE. AI company, apart from Safaricom, and they are trying to copy international markets, international companies. Give me another one. Software industries, how many are they listed at NSE? And everything is moving into tech. We are already connected through Teams. Initially, you'd have either come to the office or I come to a hotel where I'm presenting to you. But now this training is available to everyone through technology. That's how international market is. You're accessing global industries. There are healthcare and pharmaceuticals. All drugs in Kenya, they come from outside. Never be lied to. Even if they say it's a Kenyan company, that is a packaging company. The producing company is outside Kenya. Look at COVID. You needed that injection. Where did it come? Johnson and Johnson and other companies. They grew during COVID. Everybody needs medication, especially when you reach retirement age. And young generation from 6 years downward. You know, kids, any change of environment, medication. Where does it come? Anyone above 60 years and above, we are prone to any disease because our bodies are weak. So tech, healthcare, pharmaceuticals, those are big brands. Look at Kenya. We own a package what comes in. Give it a name. Said it. Consumer brands. You never miss a drink. Coca-Cola. We always think it is in Kenya. Unfortunately, it's outside. Nike, who doesn't wear shoes? Even if they have other competitors, they are copying from them. But these are big brands. But they are making profits through exports. Huh? In Kenya, the exports that you can find is mostly on agriculture. Tea, that is Akina Sassini, Kapchora, Williamson. That's why they give good dividend. So when you're investing in international market, think of it like farming. Huh? Where in Kenya, you're planting what you know, maize, sugarcane, and the rest. When there is drought, then you lose. You have seen it. But then, if you're going international, think of how government imports rice when we don't have rice here. At least when you're affected in Kenya, there's something that you can import outside. The same thing. If NSE is affected, you still have international market, which is doing well. We are on bear run, Kenyans. We are making profit. We are going to elections. What will happen? We are going to festive season. What will happen? Market might slam down and go on a bear run. We used to be in a bull run. Sorry. Bull run is where prices are going up. Bear run is where they are going down. We are going to festive season. Most of foreign investors, they'll be trying to sell out. Again, supply over exceeds demand. Prices go down. That is the right time to buy. In the international markets, however, it's different. So diversifying means you are not just concentrated on your own economy, you're exposed out. And we'll see why global market is either a growth market or wealth building. We'll know the difference now between global market and NSE. So for global stocks, you're owning a company. ETFs, many companies at once, save, because if one company goes down, there's another one within that ETF that is going up. And remember, the providers of these ETFs, they always balance. Because these ETFs, they track an index. When a company performs poorly, they remove it, they bring another one. So you as an investor, you never know what is inside until you go to sites and check what is inside that ETF. So for Kenyans, global markets is a way to grow money, earn income through dividend, and protect your wealth from inflation and currency drops. If you have any question, please remember to put on the chat. And if you have any question even on NSE, please put on the chat. If the chat looks a bit quiet, maybe you can say hi. Just say hi to be sure we are together. Just say hi. Okay. So if you have any question, put on the chat. So international markets, capital growth. Capital growth is where you buy shares at a lower price and sell high. That is your capital that you have put in to buy shares is growing. Like let's take an example. You bought Apple so many years back. Right now, I think it's 180. I think it could be going. We'll see in the stock analysis. It's like when you buy gold, you bought it so many years when it was 5,000. Right now, gold are around 9,000. And if you get into those big markets, you might find it is 18,000. Nvidia, they have grown from a chip making company. Chip is when you go to your laptop and you find it has a label for Nvidia, it means your either your processor is made by Nvidia or graphics card. They moved from that to an AI driven company. Gaming chips, they're the ones who make it. It started as a small, let's say like a small kibanda that grew into a very big hotel. Just through price appreciation. For them, they mostly invest into technology, give less of a profit to their shareholder. I want to drop this code, please. So most of these international companies, instead of giving much of their dividend, they usually concentrate on growth. So you find prices are moving up. ETFs like S&P 500, which we said is a pool of many US companies together. If those companies within that ETF are growing, then your investment is also growing. It's the same thing with NSE. If a company is growing, it means your portfolio is also growing. So then how do you build wealth? So for those who are looking at capital growth, global markets for you. Price movement, sell high, buy another company it's low. When it goes up, sell. International markets, there are companies which give dividends. How is it paid? A company makes profit. They decide to share that with you. It is not sent directly to your M-Pesa or to your bank. It is posted on your trading account. In NSE, however, it is sent directly to you. So you have dividend kings in the international markets like Coca-Cola, J&J, Johnson, and other companies. And they have been making profit over time. Just check people who drink sodas. Most of them, they go for Coca-Cola. If you have a baby, you always go for Johnson and Johnson powder and soap. You're supporting them and other companies. So instead of those companies reinvesting their profit, they usually share with you. So basically, if you own a dividend stock, it's the same way you'd have a cow which never stops giving you milk. Remember, you're not feeding this cow. You're getting milk, selling this milk, getting some profit. Where a growth stock is that cow that just grows in size, then you sell it when it's expensive. So that is the difference between growth stocks and dividend stocks. In international markets, we have ETFs that give high dividends. That is, the companies within that ETF are giving dividends. We have VYM, it is usually given by Vanguard. So they collect from those so many companies within that basket, then pay that dividend to you. A good analogy, you have so many houses you have built yourself. Those companies, as long as your tenants are paying rent, you're getting some profit. Remember, you have not sold your houses. They are paying you in form of rent, reducing the risk. That is, you'd have built those houses, sell to somebody else at a higher price. That is growth stocks. Here, the rent is more like dividend. For those who don't know how dividend works, and these dividends, they will give you a passive income. Why? You're not selling these shares, you're only receiving dividends. The same thing with NSE. Companies which are giving dividend, you have not sold your shares, but they're giving you the money. That comes in between passive income, which is more of dividends, and growth. So passive income is where you're getting steady income from your shares without selling them. That is a company sharing profits with you. It's like having a fruit tree that every time you are harvesting those fruits without selling that tree. While growth is where you are investing, then there is growth in price. So you buy low, sell high. It's the same thing when you buy land. You go to a place where it is cheap. After some time, when that area starts to grow, you sell at high price. So that is the difference between dividends, which is a passive income, and capital gains, which is growth. So capital gains, price goes up, you have to sell to make gains. Even NSE, Companies when they go up, if you are looking for capital gains, you have to sell. If you don't sell and prices goes down, remember your portfolio is also readjusting. For dividends, whether prices are going up or down and that company is giving dividend, you are receiving free cash. So we come to growth and wealth strategies in international markets. There are companies that follow the growth, and there are many. These are just a few examples: Amazon, Tesla, Nvidia, which if they give dividend is very small, but their price spikes up. These are companies which are reinvesting their dividend. They are expanding instead of paying that dividend to you. Tesla, instead of paying profit to you, they are thinking of the next technology to add in electric vehicles. They are becoming popular these days. With time, prices goes up, you sell. There are those now that fall under wealth peak. Wealth means you are getting money without selling. Dividends. Coca-Cola, Johnson and Johnson, Microsoft. Microsoft is actually a hybrid between growth and dividend. They invest part of it, they pay the rest as dividend. For wealth peaks, these are companies which are stable. They pay regular dividends and grow in their value. Coca-Cola, it pays dividend every year. We'll see in the stock analysis. Microsoft is a hybrid. It is reinvesting in cloud computing, and I think they have also gone to AI. If you look at their browser, Edge, you find there is an AI tool they have put there. But they also give dividend. Look at it where you plant a mango tree. When it starts to grow slowly, it gives you fruits. But as it grows, when you start getting more fruits, it's the same thing. These companies, they are investing their dividend to grow. After some time, now they start giving their profits to you. Now we have two categories of investors. We have young investors below 40. That time you have enough time. That time you are ready to take risks. You are focusing on long term. So you are buying shares at cheap, selling at high, buy another cheap, sell high. You are doing more much on growth because you have time. Old investors reading on wealth because you don't have time to play around with the market. You need stability and regular income in your retirement. So you are buying stocks that will regularly give you a dividend. In your retirement, when you retire, you come and put all your pension in stocks that give dividend. So that in your retirement phase, you're not using your cash. Remember, you have bought shares, but you are receiving free money from shares for your upkeep. So in international markets, for young investors, you lean on the companies which are growing, Nvidia and the rest. If you are old investor, concentrate much on dividend kings because there is no time for a person above 40 years to play around with your money. If you lose, you panic. For young investor, you lose tomorrow, you recover. Remember, when prices goes down, they will come up, which may take some time. If you're 40 years and the market takes 10 years, you are 50, you have already lost hope. So that time you concentrate much on what will be giving you regular income in your retirement. Remember that time you don't have a salary that you're adding in to buy more shares. Young investors, they have money that they are getting from their employment or self-employment. They have enough money to buy shares. Watch prices go up, sell, buy low. They have that time. Anybody who is heading to retirement, you are thinking how you live in your retirement. Even NSE is the same thing. Young investors, they look for growth. Old investors, wealth. And that's where dividend kings come in, even in NSE. The stocks that are giving good dividends, as an old investor, try to invest on those as much as you can, because now you'll be getting regular income. Young investors, look at how you can grow your wealth. And when you sell, don't withdraw. Buy another stock that is low, build your wealth. When you reach at 40, if you have enough money, now concentrate on dividend kings. So we come to stock analysis. I'll first go through briefly on theory, then we come to practicals a bit. It's one good site you can use as a beginner. TradeView is also another site, but mostly for growth investors. We'll come to it next Friday. Today, I want to first build on what we did in NSE, wealth building. So the good thing with stock analysis, you can do quick stock screening. You can get PE ratio, price to earning ratio, which tells you how expensive a stock is compared to its profits. Dividend yield, how much of their profit are they paying back to you as an investor yearly? You want to concentrate on high dividend yield stocks. Also, revenue growth, if you are a growth investor, how much is that company growing? Because it's the same way the prices are going up. Then, still on stock analysis, you can get company profile. Analyze how much of the revenue are they making? How much of earnings are they making? How much of the profit are they giving in terms of dividend? How they been giving dividend? Is it that they give this year, next year they don't give next year? So that you make a decision on which stocks to buy. If a company is giving regular dividends, you want to concentrate much on that. If a company is growing, you want to put your money there so that your profits also grow. But make sure that company is also giving you dividend. And else you are short-term trader. Stock analysis gives you valuations. P ratio, as I've said, price to earning ratio, which is the share price divided by earnings per share. In international markets, they have made it very simple. If you have looked at the previous videos on my YouTube channel, you find international market, you can use Google Sheets to do a lot using Google Finance Formula, which you can't do with the NXT because their data, they usually sell. It's not available to the public. Market capitalization, the same thing. Total size of a company in stock market, which can tell you between big chips, small caps, and medium caps in terms of capitalization. Then through stock analysis, you can even compare stocks within the same sector so that you know which is cheaper relative to the earnings, so that you know this is a company I can buy. You also get analyst ratings. We are coming to that, where they tell you buy, hold, strong, sell, strong buy. But remember, this is an independent person who is giving you this analysis. Don't use it as a first option. It's only a guide. Then you as the investor, it's the same thing our research do. They give you a second opinion. It is you to make the right final decision. Use the information you have out there to make the final. If they are saying it is a strong buy, ask yourself, does this company have a future? Are they giving dividend? Is it a growth in terms of price before you get in? No? Remember, these analysts, they are individuals like us. It's only that they do more in-depth analysis. Always compare companies within the same sector, see what they are doing. So for growth investing, you always look at revenues and earnings per share, because that's what dictates whether that company will grow in price. If you're looking at wealth, then you're looking at dividends and stable business models. We come to Kenya market. Growth, Safaricom. It is going out there giving small dividend. That's a growth stock. Equity KCB, growth stocks. Look at AABL, look at BAT. They are more wealth building. So that's how you play around in the market. Whether you are a growth investor, those are young investors. If you are experienced or you are headed to retirement like me, you look at wealth building. Remember, this wealth you pass over to your generation. So before we proceed, I want to open stockanalysis.com. Allow me to stop sharing. We go to stockanalysis.com. And if you have any question, please put on the chat. I'll be coming both NSE and international markets. So let's continue. So I hope you can see stock analysis website. Just confirm on the chat. Just confirm that's what you can see. We are coming to Q&A in a few. Esther, confirm you can hear me. Karaoke, I will share my link. Just confirm you can hear me. And my voice is okay. Just confirm on the chat. I wouldn't like you to miss these. Okay. So let's go to stock analysis. And as I said, today we want to first tackle wealth building. Next week, we are covering growth. What does that mean? As I've said, stock analysis is for those who are concentrating on wealth building. Trade view, because of its sophisticated graph technology, it's more of growth investors, where you can track prices. So I'm on stockanalysis.com. Let me share that link for those who may be following up on computer, or for those who are on the phone and would want to follow up. So that is the link. It's there on the chart. So for stock analysis, you first want to, as a wealth builder, the first thing you want to know is whether a company gives dividend. As you can see, they have over 5,000 stocks, where in NSE, we have less than 60 stocks. That's the beauty of international market. You have more stocks to diversify it. So the first thing, you go to dividends, as you can see under this tab, the stock screener. You want to concentrate on stocks that are giving dividends. So you arrange the column for dividend in ascending order. And you can see the companies which give good dividends. Most of these, maybe we don't know them. Let me see if there is any that we can relate with. See, even on the first page, let me see the next one. Maybe Microsoft, the first one, MSCI, is giving a good dividend, which is Z7 Bob, annual dividend. If you want to know how they pay, you just, once you open the company, you go to dividends. It has even the date. Dividend yield 1.3%. Annual dividend $7, around 7.2. If you convert, that is around 840 Kenya shillings for every one share you own. Ex-dividend dates, they usually pay, most of these they either pay quarterly, monthly, there are those which pay half year. So you need also to know how they do. Payout frequency. This is quarterly. So this $7 is divided in 4. And you can tell the dividend growth and payout ratio. Like for this company, the payout ratio is 46%. It means they pay 46% to their shareholder. 53 point something they reinvest. So this is a both growth company and a dividend stock. Because half of it they are investing, half of it they are giving you back to the investor. Growth years, it's 7 years, and you can tell how much they have been giving. Like now, for those who already have shares, in August, those who had shares, they would expect, they have already been paid on August 29th. The next one now you come in the next quarter. That is on Microsoft. Under the same company, as a growth investor, you want to see whether this company is growing. You go to financials. You check how their profits are doing. Never look at the gross profit for any company. Always look at net profit. Let's see. Should be around here net income. Always check whether the profit is increasing. Like you can check from 2020 for Microsoft, it has been growing even to year to date. So this is a company that is growing in value, and they are also giving dividend. You don't want to buy shares in a company that is not growing. Also check dividend per share, how it has been growing. Started from 2.9, 3.6, all the way to the current 6.8. And for this year, because there is that quarter we are remaining, it will come to 7.2. And you can see dividend growth, because you are looking at wealth building. If you put on the chart, it can tell you how much it's growing. You also want a company that is growing in form of profits as a wealth building investor. So that's the first thing. So you have dividend, then income. Balance sheet, very important. Liability against assets. Because assets will be the one which will be used to set out to offset liability in cases where the company is winding up. You don't want to buy a company which liability is more than assets. Debts, are they more than assets? Remember, when a company is winding up, they have to first pay their debtors before they come to shareholders. So you don't want a company which is burdened by debts and assets are less. As a long-term wealth builder. That's where balance sheet comes in. Cash flow, where are they getting their money from? You don't need to go into details. Check how their income have been growing over the years. Are they making losses? Are their cash flow always dwindling? Because that's not a company that is growing. If their cash flow is increasing, it means this is a company that is growing. And always compare year-to-date current with the previous years. Like if you look at 2025 up to June 30th, Microsoft is always growing, even compared to the previous, which tells you what, in the next part of the year, they have outgrown the previous years. So as a wealth builder, dividend, and financials. As we said, at the forecast, you find analyst ratings. But these are independent views. If you are to arrange with analyst, I'm not sure whether it can do that now, You see the analyst who is rated. If you see those stars, it means these are people who are rating these analysts. Meaning what? They have followed their analysis and it has made sense. But again, look at what they are projecting. But remember this, as we said, is secondary information. Don't rely on it. Like if you look at Microsoft again, they have been hold, strong buy, hold, and now it is a buy. Does that mean you buy? You need to do more analysis before you get into that stock. So as a grower, as a wealth builder, dividend, financials, then what analysts are saying. Now with those three, you can make a decision to buy or hold. There is a comparison tool. We have said you can compare stocks. Let's take Nvidia. NVDA. It is there. You can compare Nvidia maybe with another stock. Nvidia is in tech, so you can take Tesla. Tesla is in energy. Let's take Meta. You can do a comparison between the two. And you can see Nvidia in blue is gaining against Meta. Would you go for Meta or would you go for Nvidia? As a growth, you'd go for Nvidia. But again, as a wealth builder, then you'd want to know which one is giving dividends, because that's what you are looking for. So stock analysis, it has a lot of things you can do with it. It's not just that. You can check financials for the companies at one go. Revenue, you can arrange from top to the bottom. And as you can see, Tesla is outdoing most of the ones we know. Pepsi, which I think is a competitor of Coca-Cola. We have Johnson & Johnson and many others. These are companies you'd want to get into. Even earning per share, it is there. So in international markets, you find much of the information is done for you. If you got valuation, again, everything is done. Price to book ratio, which we discussed last time, PE ratio, and many more. If you are to add, you can add as many options as you want. That's why for stock analysis, is inclined more to wealth builders, not growth investors. Because for growth, then you need those charts. But they are there in stock analysis. But I find TradeView more friendly for those who are looking at in-depth analysis for the company in terms of graphical representation. You can see even earnings carried up, the companies that are about to announce results. Just from stockanalysis.com. We go to ETFs, ETF screener. There are those ETFs that give dividends, and there are those which tracks specific sectors and also asset classes. As you can see, at the asset class, we have fixed income and we have equities. And I think we should have funds and also commodities. You can always arrange alternatives. There is asset allocation. Most of the asset allocation, it means they are investing in different products. They are commodities and equities. I want to concentrate on dividend ETFs. Then we arrange with dividend yield. As you can see, there are so many ETFs that give higher dividend. Like the first one, which is giving 8.93. And if you click on that ETF, within it you can go to holdings and you can find which either assets or stocks which are there. Let's go to one, let me find it here. VOO, S&P 500, it's one of them. Then there is SPY. You can see even the stocks that are within there. As I said, an ETF is a basket of many stocks. Like VOO, these are the top 25, but it has 507 stocks, and you can tell even the weight of each stock within that ETF. Let's see whether we can get an ETF that is giving high dividend. Let me go back. There is one for equities. I'm not sure whether it is here. That is purely a dividend ETF. It's not among the top giving ETFs, and you can see the ex-dividend data and the frequency. Most of them they give monthly. It is posted back into your trading account. So if you are looking for ETFs and you're looking for dividends, you can just go to ETFs, clean up, then dividend. So as we have said, wealth, you are building with stocks that are giving dividend or ETFs that are giving dividend, but you also appreciate capital growth. That's why stock analysis is more inclined to wealth builders, not growth investors. If you go to TradeView, which I don't want to open today, it has more sophisticated graph which you can play with, where you can see even the highest price a counter can have ever gone, the lowest, and the current, and then you decide, do you want to buy now? Do you want to buy tomorrow? Do you want to sell now? Do you want to sell after maybe some time, depending on graph direction? So that is the difference between stock analysis and TradeView. Stock analysis inclines more to wealth builders because there you can get dividends and you can see performance. Like for ETFs, you can see the performance of each. So let's go back to our presentation. After next week, once we go through growth, then we can come back. Now we see how you can use them to make decisions on which stocks or ETFs to buy. So again, as a wealth builder, you need to see PE ratios, dividend, mostly dividend yield, because you don't want to get into stocks that are giving higher dividend, and also companies which are growing. And also analyst rating. What are they saying? Is it as buy, hold, or sell? But remember, every analyst, they usually have a disclaimer. So this is a secondary opinion. It is you as the investor to decide what you want to buy. So maybe after next week, because next week I want to concentrate more on growth investors. Today we have concentrated on wealth builders. Now next week, we'll see how you can combine both, because you need both. Even if you want to build wealth, you also need growth. Even if you want growth, you also need wealth. So growth investing, what it means, you are buying stocks of a company that are growing very fast. Their profits may be small, so they don't share that profit with you, but they reinvest. But then your share price goes up, so your earnings also grow quickly. But remember, you can only realize that after you sell. What you look for as a growth investor, strong revenue growth, because that's what drives prices, and rising earning per share. It means this company is becoming more profitable over time. So a good example, Amazon, they will invest their profit to grow their online business, which leads to high revenue, meaning prices go up. Nvidia, EPS have already exploded, mostly because of AI. Everybody is using AI. And we are going to artificial intelligence. Even your phone, after some time, you find companies like Truecaller, they might renovate under AI. So that when you get a call, it's actually AI that is trying to check whether that number maybe is a fraud, is a marketing. Remember, these days you can only tell whether a number is a spam or a genuine. They might renovate. Well, now it tells you if number is genuine, is it a marketing? Is it somebody in your contact? Is it somebody related to your family based on history? We are headed to that direction, no? And for growth investing, as I said, young investors who have time to wait, who have time to watch the market for big long-term gains, even if stock is volatile. A stock like Nvidia, I wouldn't advise somebody who is going to retirement to buy and just wait there if they are looking for capital growth. Because every day prices are moving. It will spike with $10, the next day it falls down. If you're looking at the time it's falling, you think Nvidia always falls, but maybe in one time, during the time you have not checked, it had spiked up. For wealth building, you buy stocks that give you steady returns in form of dividend, both international markets and NSE. And these are companies which are strong and with predictable businesses. NSE, BAT, you can predict. People will still smoke. They're already addicted. Drinking, people, whether there is lockdown or whatever, people will still buy beer. Agriculture and businesses that provide essential foods, people will still buy. Health sector, people will still buy. Insurance, people need it. Bank, you need it irrespective of economic conditions. M-Pesa, you need it. International market is the same thing. You're looking at businesses that you can predict future. Who is not using Google these days? Who is not using Facebook, WhatsApp, Instagram, Thread, which are owned by Meta? Vehicles, as I said, we are going to electric vehicles and the likes. So for wealth building, you look for stable dividend history. Using stock screener and a dividend for each company, you can see whether they have been giving this dividend frequently. If a company is not giving dividend, then why do you want to buy? Let me give you a good analogy. In Kenya, Britain, the last time they gave a dividend was 2020. Do you want to still buy that company? Why did they stop giving dividend? Captura, EABL, BAT, whether market is down or up, COVID, they gave dividend. Do you want to miss on that company? Defensive stocks are stocks which are never affected by price movements in case of any instability, but they are still giving dividend. Capture or Williamson, T, unless there is a drought. But in these zones, have we ever seen drought? So those are the things you check. Stable business model. What products are they giving? Services. Look at what happened with Kenyan. Just a small announcement. Everybody panics, want to sell. But do they have a stable business model? Yes. But because of management issues, we panic, we want to sell, push prices down. Then investors start asking, why are prices going down? Yet it is us who are pushing those prices down. Housing finance. Anthony Maura, Honorable Kimani Ichung'wah wants to buy. We don't know them. Then over time they are exposed. You want to get in because they are buying. But do you know why they are buying? You push prices up. KPLC, Didinyora is exposed. He's amassing stocks when it was raw. Then when he's exposed and removed from finance committee, prices shoot up. Company is always profitable, dividend. He wants to give a presentation He's concentrating on company where he's an investor. Why is he not concentrating on other companies? Because he wants to push these prices up. He becomes a billionaire. Sell. He's already a billionaire. He enters a billionaire space. But we as an investor, we want to follow that sentiment. In the market, demand and supply push prices up depending on investor sentiment. Company are announcing results tomorrow. We are excited. We want to buy that day. It's open day. Push prices up. Company announces profit warning. That is, their profit is going below a certain range, 25%. They are mandated by CME to do that. We panic, we want to sell, push prices down. Always remember, demand and supply plays part in NSE. International markets, prices are stable because people are aware of these things. Information is out there. Stock analysis, TradeView, other sites, they are giving you that information. NSE, it is hidden. That's why international markets is for diversification and security. Companies like Coca-Cola, when they have been paying dividend. People always drink those sodas. They're making profits. Johnson & Johnson, we had COVID. They are there. We don't know what next will come. They will innovate. People will always be sick. You always need those vaccines. These are stable companies, and that's why they give dividends. So for wealth building, it's always those people are thinking about their retirement. If you're not thinking about your retirement, you're in growth. But remember, even if you're in growth, your years will catch up with you. Even if you are young, always think wealth, not growth. Why? If you think wealth, you're not thinking of how you sell. You think of how you make money through dividends. When stock goes up, that's when you sell. If you're thinking about growth, you not think about dividend, which is free cash. You always think about prices. When market goes against you, you panic. If there is a prolonged, let's say, global slump in the economy, it will come a time you think prices are still going down, you want to sell, you lose. A company, maybe it is affected temporarily by management issues or maybe announcement they made, which is not public. Price goes down, you're in loss position for 1 week, you want to sell, you lose money. When you sell that, I don't know what happens after you sell, that's when the company goes up and actually supersedes the profit you had made earlier. Never panic in the market. When you come to both NSE and global markets, don't think short term. If you're looking for short term, with the best advice, go to Forex, CFDs. Within a fraction, you can make money in Forex, but within the same fraction, you can lose all your money. CFDs, you're speculating on price movement of shares. That is contract for difference. You're getting into contract. You buy shares raw, you sell high, then you are paid the difference. If it goes against you, you are paying the difference. That's why it is contract for difference. Markets can move any direction within a fraction. So Forex CFDs, if you are looking to make money quickly, happy to go there. But remember, you can easily lose that money with a fraction. Shares, ETFs, you can never lose your entire investment unless the company closes down. When it closes down, the regulator will suspend that share. That means your shareholding has not moved, only your valuation. When company goes back, valuation goes up, then your shares improve. When you're in a profitable position, or when it has reached to a point where you can take that hit in loss, sell. A company that is suspended will be suspended again. You have seen it, Mumias. Suspended the first time, comes back. Suspended the next time, suspended forever. Until The company sorts its issues. I said CMA don't play politics. Same as the international markets. Company will be suspended. So always look where you are putting your money into. Money market fund, as I said, fund managers, they make money out of you. Savings in banks, they are still making money out of you, and they are short term. Shares, you cannot predict the ratio you can make money with. That's why shares are the best, because the rate you can't determine. I can't tell you how much Nvidia will go tomorrow. Last Wednesday, it was around 168, 167. It shot up to 172. With just one day, it's the same as NSE. Shares are predictable. You can't tell returns. The rest are fixed. So, as a good investor, always breed the two. Be the one who goes for growth and dividend. Most of the growth stocks also give dividend. So, growth stocks, long-term wealth building, price appreciation in future. You're not selling now. Dividend, regular income. So, like if you have Tesla and Nvidia, then you add Coca-Cola. Tesla and Nvidia grow the price. Coca-Cola, Microsoft, dividend, stability. Price will never be affected that much. So when market is up, you can sell Tesla and Nvidia, like capital gains. When it is down, there's a dividend that's coming from Coca-Cola, Microsoft. Same thing at NSE. Safaricom is a both growth and dividend. When it goes up, you're making gains through dividend. If you combine that with BAT, when Safaricom is going down, BAT is still giving you dividend, whether price is going up or down. So then how do you pick best global stocks and ETFs? One, first look for revenues and earning growth, because that's what it's telling you whether company is growing. If it is going in revenue, then profits are up. So if you have been making money each year, that is revenue, it means this is a company that is growing in terms of sales. If they are keeping profit, that is the earnings, then it means they are investing more for future growth. Look at Apple iPhones. They keep much of their revenue to grow their products. iCloud, Apple Music, iPhones, MacBooks. Then always compare price to earning ratio with other industry peers in the same sector. PE ratio, that's price to earning ratio. It tells you whether stock is cheap or expensive, so that if it is cheap, you can buy. If it is expensive, then you can sell. So never just look at one company, compare with others in the same sector so that you know which one to buy. Like Coca-Cola, if it is PE is 22, and Pepsi, because they are in the same sector, is 28. Then Coca-Cola is cheap, you better buy. If you have Pepsi and you have made profit, you better sell. Even NSE, it's the same thing. And I think on Wednesday, that video is already on my YouTube channel. I'll give that link. I'm actually winding up, then I give those links. We went through our report. It has this calculated for you by research. And next Wednesday, now you pick specific companies. Now we analyze this. We know, why does our research tell you this is a buy? Why do they tell you this is a sell? Always choose companies that have strong brands and leadership. Same thing as NSE. A strong brand means customer loyalty, revenue. Price goes up. Your shares goes up. Good leadership, innovation, and long-term vision. Tesla. Who doesn't know Elon Musk? Twitter, he's the owner. Connected with Trump. What does that mean? His brands are always growing. Microsoft. The brand itself, who is not using a laptop with Microsoft operating system? Unless you are using the other like Linux, which I have not seen, But most of laptops, they come with Microsoft, a brand that will never go down. It's growing every day. Cloud computing, they're offering. These are companies with future and a strong brand. Leadership. We saw what happened with Kenyan. Just suspension of MD CEO slams the prices down. We panic. We want to ask social media what is happening, yet we can't see. That alone, everybody wants to sell. And it is just a small thing. I don't think it took even 5 minutes for the acting CEO to be appointed. Company goes on as if nothing happened. The people he had already fired and those he had deployed, they are deployed to the original position, and company continues. But because we panicked, we push prices down. As I said, demand, supply, always play role in price movement and any major announcement, because during that time prices are open from 10%. Those are the only things that affect our market. One, demand, supply. Those are two. Three, open day when prices are not limited. You want all to sell. People withhold orders to buy. You will be forced to push prices down. We all want to buy because a politician is buying. People who are selling withhold to push prices up. A major announcement, there is no price bad. You place an order to sell at market. There is somebody who is waiting for a share that is trading at 200. He has put a price of 1 bob to buy. You have put a market. You execute at 1 and you form the opening price. Then the rest are subjected to the same price. That's how the market works. Huh? Investor sentiment. You are the ones who drive the market. Huh? Never be told there is insider information. No, it is your own sentiments and social media information. Please treat it, I don't know which word I can use, with the contempt it needs. These are people who are giving their own opinion. Don't follow that. Look at credible information. NSE, CMA, and brokers. The rest are just there to make money out of it. Any announcement they make, we all panic. We are in a certain group, announcement is made, we want to panic. We don't look at the broker, NSE, CMA, what they have said, the company itself. You follow sentiment from others, and maybe somebody who is putting that information have interest. Push prices down, buy. Push prices up, sell at a profit. Most of these politicians, apart from Didi Nyoro, most of them, they don't own shares. I don't think even they know what stock market is. Didi Nyoro used to have an agency. I hope it is still running. He knows this market in and out. It's one person when he speaks, listen carefully. But if he's concentrating on the stocks that he owns, be very cautious. Huh? He's one person who knows this market in and out. Same thing international market. There are people who know this market in and out. When they talk about stock market, as I said on Wednesday, as an investor, business news is your friend. The others leave to Gen Zs. Yours is business news, both local, international markets. Focus on the history of the companies that reward their investors in terms of dividends and stock price. Always check the price movement. Stock analysis just gives you a graph. If you go to TradeView, it gives you even those candlesticks which you can play around with. Dividends, check under stock analysis, the companies that give frequent dividends. How are they paying? How much? Because that determines how much you'll be paid. If it is rising, then that is a company to get in. ETFs, growth, and if they are giving dividend. VYM and the other dividend, they are good for dividend ETFs. The others, growth. So a case study, if you look at the scam companies when they are listed, prices were low. Apple. Right now, how much are those investors? ETFs when they came in, how much are they now? With just small investment, even NSE. Don't think of, I'll put 1 million one day and buy shares. Think of that 5,000. I gave a portfolio model for different investment bracket, 5,000, 10,000, 100,000, 1 million, just to motivate you, because within 5 years, irrespective of your investment, you're supposed to see some returns. If you're doing huge investment, then within 1 year, you should see your returns. Same thing as the international market, whether you are buying ETF or shares, over time they grow. Dividend, when you receive, don't use it, reinvest back. Buy more shares that are giving you dividend. You are buying another free cash using a free cash. Use that free cash to buy another free cash that is compounded. Now that's where compounding effect comes in. If you're in pension, you know how compounding works. Money after 1 year, they use the previous amount plus the interest. It is reinvested, you get more interest. It's the same thing with shares. Reinvest that dividend, get another dividend. Out of that dividend plus the shares to get another dividend. That dividend add to the other dividend free to the shares, get another dividend. And that's how you grow in the market. So growth stocks, explosive for wealth. If you're looking over capital growth, ETFs, they are slow, they are safe, but they are steady in terms of returns. Dividends, passive income, and compounding if you reinvest. And is global market good for short-term trading? First of all, high liquidity. Yes, most of these stocks, they keep on prices moves and there is already buy and sell trades. So liquidity, you're able to buy and sell. In NSC, it's only after one share rule. Volatility, prices moves up every day. Opportunities are there for short-term traders to make money, but also opportunities to lose money if you play differently. You have access to many global companies, ETFs, shares, forex, commodity indexes, and contract for difference. Different from what you're used to NSE. Then extended hours. There is pre-market and after market, though there is no much of trading you see, but it's always good now for you to predict. Remember, NSE, when they close, they close. International markets, you can always tell what is happening. Like between now and 4:30, it's called pre-market because market have not opened. If you see prices are going up, know there is something that will push the prices up. If you see prices are down, know there is something that will push prices down. So that's the time you check. During 11 p.m., that is 9 a.m. Kenyan market to 4 p.m. 4:30. It's pre-market in international market. After 11 p.m. to the following day, it's called after trade. So if you see there are huge transactions coming in during pre-market, no prices will go up. If they are not, prices will go down. If they are going up, then be ready to sell. If they are going down, be ready to buy. After market, it tells you what happened in the market and what we expect the next day. It is different with NSE. So for experienced traders, chart patterns, indicators, risk management. As we go on with these trainings, we've gone out to TradeView, where now you do all those technical analyses. If you have person who have time, monitor market data. International market is not where you buy and wait. You have to monitor your portfolio. If you are ready to accept losses, be ready. If you are short-term trader as you run, but remember this is not for old generation. Your old generation, you don't have time to lose money. So that's just a small comparison between short-term and long-term. Time horizon for short-term in international markets can even be minutes because price moves in a minute or weeks. Long-term, you look years to decade because you're growing and wealth. During short-term, price movement is high and they are volatile. Yeah, long-term, you look at fundamentals and compounding through investing dividend. Tools you use for short-term, TradeView, indicators, moving average. Long-term goes to stock analysis, financials, dividend, valuation. So that is the difference I wanted to make today. Stock analysis for long-term. Short-term, go to TradeView. Capital needs for short-term, you need very huge amount to make those profits. But remember, you can make losses. Long-term, even NSC, with 1,000, you can start and grow over time. Risk, short-term, it's very high because it's like you're betting. Long-term, they are very low, very low. In terms of stress levels, short-term, you are panicking every minute. Long-term, you don't even need to worry. Stocks, for short-term, look at volatile stocks and meme stocks. Long-term, dividend growth stocks. ETFs, short-term, look at volatility like triple Q. Long-term, S&P and VYM for dividend. And short-term is for people with skills, time, and discipline. Young investors. Long-term, if you are beginner, if you are busy, or long-term wealth builders looking at retirement and passing wealth to children. And for us, I would want us to go to long-term. We build wealth. Before I continue, we are done with stocks and ETFs. I want to go to briefly through Forex because it relates to international markets so that you're not confused between the two. But this is introduction. Again, a recap of what we did in the previous international stocks video, but I'll be building this slowly. Forex is where you're buying one currency while selling another. If you're buying euro, you are selling USD. So you make money when you predict correctly. So you buy raw, when it goes up, you sell, or the other way. So you make through that difference. It is one of the largest financial markets and one where we as Kenyans are foreign victim of, where you're told you can make money with Forex. It's one way you can lose your money quickly. Is it worth for wealth or growth? Forex is for growth because of that short term. For long term, don't ever even think of Forex. You can put your money and you close your app and go, then you come, you find you have wiped everything. CFD is the same. Short term growth, not for wealth. They don't give dividend. CFDs, even if you're speculating on movement of shares, you don't own that company. Forex, it's currency. There is no compounding. It's not where you can reinvest dividend without selling. Here you have to set to close your position to realize the gains. So if you're looking for wealth, ETFs, stocks, dividend, and other products. If you're looking for growth opportunities, be happy to go to Forex. But knowing very well, you can lose your money any time. Now we go to Q&A. Hopefully it wasn't a lengthy presentation. And I hope everybody is still there. Let me first confirm. On the chat, just confirm, because now I want to go to Q&A. Let me first share the YouTube channel that I'll be posting all these. It's taking time as it comes. Okay. Let me give you the YouTube channel for those who may want to drop. And if you have questions, this is the time. Just looking at that playlist. I don't want you to go to the channel and all the videos, because the others outside stock market. Just concentrate on the my wealth guide playlist. It's hanging. Just give it a moment. And if you have a question, please put on the chat. I'll try to rush quickly through Q&A. Then after that, now we can meet next Wednesday for NSC share trading. Hopefully I can find, maybe after that, I can find time now for Forex and CFDs, maybe over weekend, because those ones, they are not offered by authority at the NSC. They only offered at the brokers who do international markets. Everything you don't see at NSC, it is risky, apart from savings product. So that is the playlist. Let me also give you my WhatsApp channel. I managed to restore it. Hopefully we don't get somebody else who is reporting that channel. It's just there to help investors. Let me get that link. You can just follow. And there is also WhatsApp community. Let me give that, then we come to Q&A. So that for those who may want to drop, I can allow them, because few minutes to 3. I would want to cover that time for Q&A. And if you have any question, both NSE and international markets and other products, you can ask. As we wait for that to open, let me see if I can get, and my number 0723 384 775. It's on the screen. That's my WhatsApp number. If you are stuck anywhere with AIB, NSC, and any other product, reach out anytime. During daytime, you can call. I want to pick the link to the channel. Feel free to reach out. Don't be stuck with any question or any issue that you'll be facing. Even if it is account opening, reach out, I will help. For me, it's all about how you invest. If you have a group that you'd want to be trained, happy to do that free of charge. No charges. We can organize for online training, or you can decide to come to our office. It's all about how you want it to be done. Our offices, they are in just behind Westgate, the Promenade, General Madenge, 5th floor. So I've given YouTube channel, WhatsApp channel. For those who don't want notifications, you can follow that channel. Or if you want to join our community, it is the third link. And none of them is exposing your number. I mind about your privacy. So we go to Q&A. Let me quickly go through that. And the videos will be shared on that YouTube channel. Links shared on those 2 links, and also Telegram channel. Let me see, those are AI. Where are the questions? How does BAT make money? Sale of cigarettes. Remember, when you start smoking, you become an addict. That's the downside of it. As an addict, you'll always smoke. They don't have any big expenses. How many addicts do we have for smoking? I think there's as many as we can guess. Remember, when somebody is smoking next to you, you're also a passive smoker. The next thing that will happen, you'll be addicted and you might end up smoking. So that profit they make is what they share with their investors. They don't have any other innovation they can do again across smoking. We have seen the shisha, the way people smoke, that is not an innovation. So smoking is one way they make money. People who drink, they know. You sit down next to a smoker, you not know even what the time you started smoking. That's where BAT and EABL comes in. They are brother and sister. On the same international stock trading, I haven't been able to access on online and app. Is there another alternative? For now, we are going through desk. Orders through email, calls, or WhatsApp. We are working to integrate. We had hoped to do it before mid this month. Unfortunately, there are some few issues we need to sort. We hope to bring it in few weeks time, where you can buy fractionals. It will be there on our platform. Best apps to access international stocks. Always check accessibility of that stockbroker and the contract we have with them. We are regulated by CMA. There is nowhere we can go with your money. What if the other broker shuts you? You're using, I don't want to give names, an international broker, they will lock you. Will you ever get your money? Do they even pick their calls? It's something you need to check. Also, when a broker tells you it's free commission, check the price. The price, as I have said in the previous videos, if you have seen on my channel, the price a broker will give you is not what is in the market. It is higher. That difference is called spread. That's how they make money. So free commission, they recover it with price difference, which is more expensive. If I buy Nvidia Tesla through you, who is the custodian? We have a global custodian. You don't need to worry about that. Actually, it is the IB's headache to make your shares are safe. It's not about you. So you don't need to worry, Charles. If you want to know more information, you can reach out. But it's the IB's headache. Is there a possibility KPLC may come down clubbering? It all depends with the politics. For KPLC, for the longest time it was politics. But you have seen it start giving dividend. KPLC gets power from who? Kenyan. Kenyan is always profitable giving dividend. Why was KPLC making losses and not giving dividend? Politics. So I believe right now it might start shooting up and become a more profitable because everybody is using power. KPLC have that monopoly. Can your team actualize all stocks, both international? Yeah, this will come to our app and also online portal. We are working on that. I'm part of that team. If I buy Nvidia Tesla through you, who is the custodian? That I think I've already answered. Global custodian, headache is the IB, not you. You even don't need to worry. You track gains and dividends. Best app, wait for AIB DigiTrader because you have access to everything, fully regulated. But there are also other apps. There is this article, why stockbroker should work with innovation. AIB is one of them. We spurred the market. We never used to have online portal and apps. It is AIB who started. There never used to be APIs to integrate. It is the IB who started. That's when my stocks came in and innovated. They gave you access to the market. My stocks sold their app to NSE as Dosika. There is Rhino. It's also riding on AIB's innovations. I hope this article on the news is talking about other brokers, not AIB, because you will be shocked how much you see innovation from AIB. going forward. As I said, I'm head of product development and innovations. That's why you see AIB is always innovating ahead. There are so many things that are coming. So this should not worry you. This is actually pointing to other brokers because they are pulling the market back. Go to all the apps in the market and tell me any app that is giving you same day settlement. It's only AIB. Account opening, another broker copied AIB. Is it working? For AIB, it's working. So this, I think, it is directed to other brokers, and without innovations, most of brokers will be shut out of the market. But remember, they own NSE 30%, 70% public. Remind us when AIB is meant to start. International market is there, David, but through desk, email, and WhatsApp orders. Minimum 100,000 just to control traffic. We already overwhelmed with 100,000 minimum. But when we go to DigiTrader, open to everyone. Best month and period to buy global stocks. Maybe to buy is when global markets are down. When tariffs are introduced during elections in US, because prices are usually down. When you hear government announcing things that are in favor of companies, that is the time to hold, wait for prices to go up, sell. But again, you have stock analysis, trade view to track the market. Always buy when low. How about best month season to buy local NSEs? Best time to buy NSE stocks is after announcements. Results, ex-dividend date to payment date. And in BRN, when market is going down, that is the time to buy. But remember, your cost always average. Even if you buy high, when you buy low, cost always average. But the best times, and each company have its own cycle. During drought, it's the time to buy agriculture sector. During rain, they are high. Other stocks, EABR and the rest, festive time. When it is not festive time, remember prices are down. No? Travel, KQ, during festive time, they're in demand, prices are high. After that, they're stagnant, prices are low. Politics, we are going to elections, that time market will go down, depending on mood. So always check. When politicians are making pronouncement out there, you take them as political noise, but check the market how it is affected. If it goes down, time to buy. When market panics, maybe because of a short announcement, the following day, get into the market. Market will go up after that. If I sell today shares on NSE, you said withdraw instant via M-Pesa, right? Yes, there is an extra cost because we are not subjected to T+3. We are giving you money early, meaning EIB is taking overdraft to pay you. We are paying an interest in bank to pay you. So there is that fee. We share with you 5%, but you can get your money in a day. For global markets that AIB Access have different accounts. Yes, we do with BOA, Bank of Africa. Just go to our website, Trading Global Markets. It is you to decide where you want to. If you said from your Kenya shillings to our USD, you have already made conversion, no? From your bank. If you said to our Kenya shillings, we receive as it is, we convert with current rate. So we have given you both options. You can pay to our Kenya shillings or USD. And paying back, we can pay you to your Kenya shillings or your USD account. It is you to decide. Difference between ETF and index fund. ETF trade in exchange. Index funds, they track an index. They are managed by fund managers. YouTube channel, I've given the link down, Gentasad Studio, but also for AIB Access YouTube channel for research. For Gentasad, you are retraining. Why? You have seen I'm also talking about how politics affect you. I don't want to expose AIB to that. Let them come and attack that channel, not my channel, not AIB. Yeah. Mike, I think it's okay unless it is your side, but I will share this recording. Can we buy international stocks through AIB Digit Trader? Not yet. It is through desk. Assuming an individual is employed, what would be the cut-off age when we are talking about young versus old? Young before retirement, old after retirement. You are young as long as you are working. Even if it's 70 years, you are still young. When you retire, you don't have any other investment that is, any other job that is giving you returns. That's why dividend cater for you during your old age. So as long as you are working, you are young, irrespective of your age. That's the time you actually use your salary for your retirement. You said we are on bull run at the moment. Yes, prices have been going very high up, and we expect market to go down in future in December and also next year and next year but one because of elections, unless political mood is stable. Counters that beginner can take up, you can take up any counter as long as you know the company you are getting into. Refer to Wednesday's training. I said it all depends on what you are looking in the market. It also depends with your income. Don't try to struggle to buy expensive stocks when you can buy cheap stocks as long as they are giving you dividend. For me, I train on wealth, not capital growth. Capital growth is the easiest way you can lose money because you sell too early. International market, can one open a junior account? Yes, a junior account you are opening, you and the kid, you are the one managing. So W8BN form is you as the parent to fill in. As I answered the previous question, international market knows the IB, not you as the individual. So even a kid, you can invest for them, but the shares belongs to them and you as the guardian. For the first time, international investors, what are the requirements for starting to trade? Is this the same as CDSE account enough? Remember, when you open a CDSE account, you have an internal broker account. It's that internal broker account we are using, but opening an international market for you where now shares are held. So you have to, CDSE holds NSE, international market account holds for global markets. Lowest amount a share goes for, it depends on the stock, but in dollars. The highest again depends with the stock ETF. There are those that trade even above $1,000, and there are those which even trade below $1. It all depends with the market. YouTube channel, thank you KK for sharing. Pardon for some of the question. Please ask any question. Don't go with the question because that can prevent you getting into the market. If you had discussed the money, I came a little bit. I would like to know if AIB is currently offering platform for international markets. As I said, currently through desk, but we are working on a digit trader in online. Using M-Pesa for now, no, it is, we are funding BOA. If you fund our BOA account with M-Pesa, you need to send confirmation because we need to know who deposited. If you're transferring from your bank, remember to quote your client code, not CDSE number, client code. Shilling, then they change. It's all you as the client to decide. You want to send to our Kenya shillings, fine. If you want to send to your USD, fine. So you have both accounts. If I need to invest in ETFs, should I open different accounts where still stockbroker? It's the same account. Only that now you're only differentiating in terms of custodian. NSE, CDSE. International market, global custodian. Difference between final and interim. Interim is when company announces half-year results. They have made profit, they pay you. Final, it means they are. It's the when they do the final audit for financial year, they are giving another dividend. There are companies which give both because they have made profit in both, and there are those which decide let's give when we are fully audited. And there are those which give special dividend, meaning they have made extraordinary profit. So have you now started global trading? Yes, through desks. How can local traders start trading? Just go to our website, Trading Global Markets. You have full information, including Q&A. That is true. Like the panic that was allowed this week after court order on Stanchart, it failed, but still came back up. Let me tell you, social media people are there to make money. They might be paid by somebody to just draw that information out. We panic, we want to sell, push market down. Excited over small announcement, push market up. Demand, supply. Play very great role, and when market is open. Demand, supply, market open. Again, even that time, demand, supply. International market, you never see such things, because these are people who are well advanced. They know the information, and they are, most of them, they're outside those countries, so they don't care what happens. But a small announcement in NSE, price can go either way. Then after that, it's stabilized. Don't ever sell based on social media and panic selling. Sell because you have made profit, or you don't want to make more losses. You want to sell and get into a stock. Best source of business news for local and international markets. For local, business news, business daily, sorry, Nation, then NSE, CMA, CDSE, and the broker. Any other information, verify. For global markets, go for global news sites, CNN and the rest. Also, use stock analysis. They also give news and trade review. For other news, always verify with a secondary information, but also check company website. What is the relationship between volume and share price? Volume, when it is high, it means more people are either buying and selling. It affects the price. So you need to check if there is a high volume. Is it because there are people buying? Is it because people are buying? Demand and supply. So high volume may push price up or down depending whether it is buying side or supply side. Lower volumes, it means that there is no much of trading activity, and that counter is not liquid. You can't sell that easily. Are you an experienced international trader? I'm the one handling it. So it can tell you. I actually learned from a source who is a custodian who knows both markets, local, international. I don't want to disclose the name, but he's a big name in the industry. What is common for financial statements? Net profit to common. Maybe this I don't understand quite well what you mean, but financial statements, net profit, because tax, net profit after tax, because that's what the company is retaining. Then check what are they using for that. Also check revenue side, and also if you go to balance sheet, liability against assets, and also debt ratio. How much do I need to start international markets? For now, it's 100,000, but after we go to DigiTrader, no minimum. Yes, we are offering international markets, Kevin. In cases like Mumias that have been suspended for 3 times, what exactly happens to those who invested. You say the shares are still there, but if the company never revives, do they lose the shares? No. That's why CMA suspends so that you don't lose value and you don't sell at loss. Until the company resolves its internal issues, either it comes back to the market, you continue trading, or the company offloads its assets, pays its debtors, the remaining is paid to shareholders. That is liquidation, or it is bought by another company like the way Rai wanted to buy, then he buys out shareholder. The problem is we always have people having interest going to court to prevent that. As the investors who are already blocked, we don't come in as interested parties to say we are being rocked. CMA can't act anything outside the court. You don't lose the shares. You're still a shareholder. The company is still listed at NSE. Delisting means either they liquidate and pay you, or they are bought out, or government comes in, or an investor builds the company, it comes back. On KRA, you said fair nil returns, but you get to make considerable amount of money. Do you need to change how you file returns or tax deducted on dividend? The amount one gets after selling shares. First of all, there is no tax you are filing. There is no capital gains tax, both international and NSE. Secondly, for dividend, it is deducted at the source by the registrar for NSE. They pay, they file tax on your behalf. You are never involved. International markets deducted at the source by the company registrar. You never file that. W8BN form is just for records. Stocks and shares so important in wealth building portfolio. Stocks and shares are the same thing. Stock is just another name for shares, and they are good for wealth building. Because shares, you are owning a company, it does well, you make money, get dividend without losing value for your money. You're exchanging money in the ownership of a company. They are the best. I've never seen any other product apart from savings product like money market fund, bonds, insurance savings plans, and pension. Shares, they have no limit to how much you can earn. That's why they are the best. They don't have limit. It's all about the prices. Hi Peter, what rate or dividend yield does AIB ETFs give annually? It's not AIB which is giving, it's the company. And each company has their own dividend yield. If you check the Friday's training, at our daily market watch, they are giving the dividend yield. It is posted on our YouTube, our Telegram, WhatsApp groups. That is not the channel. AIB groups, daily watch list. They have given shares and their own dividend yield. That is calculated based on the dividend the company is giving and the price for that day. So it's not AIB, it's the company that declares dividend. AIB is just a broker connecting you with NSE. What's your view on Standard Chartered and Stanbic? Is it the right time to buy for dividend? Yes, because of next year's dividend. Stanbic, they give you a good dividend because they have a worldwide exposure. That's why their dividend is high. They don't concentrate much on growth. Stanbic, again, worldwide exposure, good. Currently, we have a dividend that is open for NCBA. Maybe I can show you through my calculator, which I'm developing. Let me just show you. For those who didn't come for Wednesday's training, let me stop sharing that. Let me share this. This calculator does everything for you. You just select who you are, Kenyan or foreign. So me, I'm Kenyan. The stocks, there are those which have already closed books. There are those which are open. Like NCBA, if I put, let's say, I have 1,000 shares or 10,000, 10,000, and I click calculate. It gives you a breakdown of the dividend, withholding tax, the tax that will be deducted, and amount you pay, amount you get paid on the payment day, and it tells you when you need to have those shares. Down there, it even tells you when you receive NCBA dividend, you can reinvest in Centum. Possible, the investment of NCBA dividend, the amount that you receive, you can go ahead and buy Centum. Why? Because the book closure for Centum is after payment day for NCBA. Payment day is 2nd October, book closure 9th October. If you pick car in general, which is already closed, accurate, it will do the same, then tell you books are already closed because you can't buy this share now. It's not qualified for dividend, but you're waiting to be paid on 15th September. Then these are shares you can reinvest your dividend, and it gives you the amount that you can, and the payment date. Then it is you to decide which share to buy. Then down there it has all the dividends which are still open, which you can still buy. Then let me close these advertisements. Then dividends which have already closed and the days you expect the payment. I'm working backward now to list the dividends which have already been paid, so that you as the investor can tell historical dividends paid by each company. As I said, NSE data is a bit protected. You can't just find it out there in public. Let's continue. Where was I? Let me see. KRA. Rates for dividend, I think I've explained. Stocks, but for now you can buy NCBA. It is in that calculator. Instant withdrawal on NSE. When you sell shares today, remember you can only wait 3 working days before the day. AIB can pay you earlier, but at a charge. When you're withdrawing, to ask you, do you want a repayment or on settlement? If you select a repayment, you get the same day with a charge. Settlement, you'll be paid on the date of settlement, but with no charge. For broker innovation, I think these are answered. It's other brokers who are being charged, not AIB. We are ahead in innovation. If brokers don't innovate, they'll be taken out, because the other innovations which are coming. You have seen NSE saying direct market access. There is nothing like direct market access. You already have it with our digit trader. But when they integrate the app, Dosika, it doesn't have direct access to the market. If they do it, then you'll be trading directly to their platform. But remember, Dosika, as I said, is a product of My Stocks. My Stocks integrated with AIB, sold it to NSE. So I know everything about that app. So those innovations, brokers being charged, they are way behind. KPLC and Kenyan, which is better to buy at the moment? Kenyan supplies power to KPLC. So Kenyan is a strong company without competitor. KPLC, it was politics. So both of them now you can buy. Kenyan gives consistent dividends. KPLC, we just started its paying dividend. You can wait and see if they are announced between now and December. If they announce, then it's also a good stock. But both of them, good stocks for future. How to analyze daily whispers and daily market watch? Daily whispers gives you the stock recommendations, what to buy, what to hold, what to sell on daily basis. Daily market watch gives you an analysis of the market. I did that on Wednesday, but this coming Wednesday, we are going into deep details. Now, how you make decisions based on those valuations they give you, and also for daily whispers. Available local ETFs we don't have. The only ETF we have in NSE is Absa Gold, tracks price of gold, and we have the new SMWF ETF, which tracks indexes of international markets. There is no local ETF. They are there on DigiTrader. Just go to search and add scripts option. Scroll down. Look for FW, is it SMWF, and then GRD. If they have a plus sign, just stick to add tick, then click add to watch list. That's simple. With the current market dip in Kenya, is it time to buy? Yeah, it is time to buy. And I said Kenya prices went down because of that issue they had with the management, which was sorted. Future of TLC and East Africa Cable, those are court cases until they end. Remember a court case, when it ends, somebody else comes with another one. What is it called? You want to appeal again. CMA, as I said, they don't play politics, but your shares, they are not lost. What did you say? What rates or dividend yield does the IB ETFs give? We don't have our own ETFs. ETFs, they are managed by fund managers. They have their own. Each stock have its own dividend yield and also dividend amount and the frequency they give. For NSE, it's on price list, or that is, I'll give you a link to my calculator. For international markets, I'm marking on that, but through stock analysis, you can get that. The list of all stocks and how much they give and when they give. For low income earners, is it possible to buy like one share of higher priced shares or strictly 100? You can buy, you just build your portfolio. I think if you came for us Saturday's training, I had prepared, it's there on my blog, I had prepared a portfolio model with as little as 5,000 per month. You can make 1 million in 10 years. That can tell you what, even if you're buying 100 with 100 shillings, even every day or weekly, it is you as the investor to decide. If you're buying the expensive stocks in one share, always add more. For other stocks, even if you're buying at 100, buy more and concentrate on dividend stocks. When you receive dividends, buy more shares. I saw NSE listed as one of companies on watch list. Is it a good idea to invest? Yes, because NSE, they own the market. The market can never go down. Link for dividend calculator, I'm actually posting. It's only that I don't want to post now because it will move the chart up. When looking at SAP shares, net income to common, would it be indicator to buy or net income? This data are from stock analysis. Remember, these are random data calculated by the system. That's why I said it all depends. Growth, investor, look at price growth. Long term, look at dividend and company growth. The others, just leave them to analysts. They're just there for analysts. So don't worry about the net income unless you're looking at net profit. I hope it is the net income. If it is increasing over time, it means this company is able to stand on its own. Is there a way dividend is not distributed to bank instead to trading account? We are trying that with the regulator to see if it can be channeled to the broker who credits your trading account, then you can invest. Was there gatekeeping of information about share investment in last years? Because I never heard of it before, as you are educating us now. Actually, even now, this information is not there. It's only that I thought about it and then decided, let me give it out. It is usually insider information by the brokers. It's one of the reasons I lost my WhatsApp channel. It was reported, but I managed to recover it because people don't want you to know this. You must rely with the broker. You must attend paid sessions where you are paying to be trained. But for me, I decided it is free. Information was not there, but right now you start getting it. I know now I will start charging even NSCs to start giving this in-depth training. Information must be available for you to invest. Otherwise, you invest blindly, you lose, you blame the market, yet it's because the information is not there. Like for Mumias, when it was being suspended, if somebody told you earlier, you'd have exited and forgot about it. Kabasid is a good stock. They give dividend. I think they should be giving between now and December. It's a good stock. I think it is is it in agriculture sector? Either agriculture or manufacturing. It's a good stock. There was some news on that NSE is now you can sell and buy single share. Yes, right now, even on our app, you have no minimums, even multiples of 100. You can buy any amount on our app and portal. Well, I could do that on DigiTrader before the news, but now I have realized I could not do that. What could have happened? Why is it now that I can't buy odd lots? We don't longer have odd lots. Charles, you can buy any number of shares from 1 to whatever amount your shares can without breaking. You can buy even 120, 121. It's all about your amount, but has consequences, as we have seen. Small executions in your statement. Hopefully, CDSE and SE will think about it. As the broker, we don't have control. Talk a bit about buying gold as an additional savings plan. Gold, maybe if you're speculating on the price, but it's expensive in Kenya. 1,000 plus with no huge movement, no wide spreads. Spreads is the difference between ask and supply. So you don't expect to make a lot of money on it. I would advise stocks, ETFs. Telegram link, I think I've exhausted the chat now. There is the calculator. Let me post the Telegram, my Telegram channel. Through channel, you can join a Telegram chat where you can ask questions, but don't post your details. So that is a Telegram channel. You can follow. Then you go to comments. It will ask you to join group where we can discuss anything related to the market. If you have any personal question, my number, I think it's still displayed on the screen. Reach out to me. Thank you, Beth. I'm happy to help because that's how the market grows. From the time I started training, I think EIB have seen some change even in turnovers. It's good for the market. Hopefully, NSE can also adapt that. They also start training investors. And for international markets, I think this is the 10th. Without repeating, let me see. Oh, I've not put. It is around the 10th training. Without repeating, for NSE, I think we are in the 11th. Is it 11th? I can't remember. I may need to check. Without repeating, it tells you how much you have to run in for investment. In your portfolio, is the invested value is less than current value? Is it saying that one is losing? Invested value is the amount that you have used to buy shares. Current value is the value you can sell your shares at that day. So if invested value is less than current value, it means you're in profit position, but factor cost on the side of current value. I talked about it in Wednesday's session. So if current value is higher than invested value, you find you are in green and a net gain or loss. If it is less, then you're in red, losing. But you are not actually losing. You have not sold. When market moves the other way, it will start to increase. So even if you see it in red, don't panic. If it is in green, it is you to make the decision to make the profit. Or if you're investing for long term, don't sell. For me, I always train on wealth, not capital growth. Capital growth is the easiest way you can lose money. You sell today, tomorrow it goes up. You start panicking. Look for wealth, which you can pass to your children. How do you pass it for NSE? Letters of administration through the court. Make sure you already prepared your beneficiaries, or you can share your wealth early. Instead of them going to the court, you start transferring as gift. That happens after retirement and you have enjoyed your retirement. When now you know your children are taking care of you, that time you can share. Or when you know dividends are enough in your bank to take care of you. It's you to make that decision. Do you want your beneficiaries, your children, to fight over your wealth? Do you want them to go through the house of the court? Do you want them to be disinherited? Wealth transfer. I've done that. How you pass wealth to generation. And when you're passing this generation, you are making your children millionaire because they are inheriting your millions. By that time, they are building on that 1 million. They continue. That's how people are made millionaires in NSC. Just check for that video of millionaires. Passing wealth from generation to generation. And advise the beneficiaries to never sell that wealth. Also, when you're investing now, invest for your kids through minor accounts. By the time you're passing that account to them, it has, let's say, 200,000 or $500,000 when they are 18 years. Show them how to invest. By the time they are reaching your age, you are passing $1 million to a millionaire who will pass that million to another. And that's how NSC grows millionaires. Don't be right to somebody they just bought shares and become millionaire. No. It is investment over time. How best can one go about get the best price for stock which give positive value? You can always check daily watch list. Come actually on Wednesday because that's time we'll go through the daily watch list. We digest that report. But again, always look at stock valuations. Like now, as I said, we are on bull run. It's also the time to buy if you are a long-term wealth builder. If you are a growth stock investor, it's not the best time because prices are going up. Wait for bear run when prices go down. Remember, even stocks themselves, they have a bear phase and a bull phase. When a stock is on a bull phase, it's not the time to buy. As a growth investor, it's time to think the top price you can sell. If it is on a bear run, when prices are going down, wait when they are down by that time. As a long-term wealth builder, price is not about you. It's about the gains, dividend stocks. You got sent because I was about to pay for an investment class to run on shares. We'll channel the money to shares. Thank you, welcome. I'm doing this for free, I don't charge. If you're a group or a family or friends who want to be trained, just reach out on my WhatsApp. We can organize for a day. Weekday, we are always available. Weekend, I will always organize for my transport. Come train you in our office. You run. It's all about running and how you grow. If you look at most of the people who are doing those trainings, be very cautious. Look at the link they are telling you to open an account with. Click on it. Does it have a referral code? Log into EIB, you'll see a referral program. You pay, they're also earning from your trades. And it's good for them. Let them charge. But for me, I decided that it be an open market. Which is the most effective path to start trading in global securities markets for beginners? For beginners, look at ETFs and also stocks that are within your budget. Most of them, they are highly priced. Also go to stock analysis, check 5 years performance of that company, how the price have been going up. Then check for the last 1 year and for the last 5 months and 1 month. If the stock is going up, you can buy. If it is going down, then check why it is going down as a beginner. But ETFs, they are safe for beginners. You will not lose. Also check for global brands. Does the EIB allow for companies to open a CDSE account? Yes. Invest in global market? Yes. ETFs, they are both in global and NSE. For company, those you use physical forms. They are there on our website under downloads. Under downloads, let me share our website, maybe for those who may want to know different types of accounts. And there's that article that have been shared about brokers getting innovation, you start seeing some things from AIB. Hopefully it won't scare the market, but that is our goal. We change the market. There are different accounts you can open. One of them is an individual account. That is you as an individual. That you open using DigiTrader, AIB DigiTrader, or online portal. That is remote. Or if you want to fill in manual forms, which I wouldn't advise for many good reasons, you go to our downloads page, you scroll down to this form. You open CDSC account opening form and AIB form. If you're opening as a joint, as spouse, you want to invest together, relative, a parent and a teen, 2 teens, or anybody over 18, 2 people, this is the form you use. As an individual, go to the digital platform. Why? Joint accounts as a spouse, you may want to invest for your future. Remember, you have to make decisions, both of you, to sell. As an individual, you can sell anytime. Trusted relative. Remember, there is no way I've put a friend, because you can fall out with a friend. You'll be stuck with the shares. A parent and your kids. You can open so many accounts depending on the number of kids you have. Both kids, 2 kids can open together. Then there is a minor account. Your children. That's 1 child, parent as a guardian. If you have many children, so each child have their own account, which when they turn over 18, it turns to be an individual account for that kid. So as a minor, it is you who is managing. Dividend is you to decide, do you want it to go to your main account or M-Pesa? Yes. Remember, you read that money. Do you want it to go to Ajabo Junior in a bank account? It is you to decide. Remember, in Ajabo Junior, that account earns interest. So a dividend free money, interest on dividend free money. Withdraw that, buy more shares for that kid. That's how you build your kid to a millionaire. Company, it is there. Registered companies, registered chama, or registered groups. Or if it is just an informal chama, you're opening with the names of the chairman and the secretary or treasurer. Just for transparency, and you have the minutes. So companies, yes. International markets, there is the W8BN form you need. Ignore the rest. So those are the forms. W8BN form, international markets. Shared with no one, don't worry about tax. Company, registered chama, registered groups, or informal chamas, which have minutes. Junior accounts, that is the form. 2 forms. Minor CDS, AIB form. Individual, joint, it is there. Let me again project the screen with my number and my office email. That number is available any time of the day, even at night. Just send me. When I find time, I will respond to you. Calling, I would prefer during the day. You can call on WhatsApp or on normal call all the way up to around 9:30 before I sleep. I wake up very early by 5. So you are free. I think that I've answered that. If you have an MMF for children, is there provision to direct the dividends there? Yes. Remember, dividend is paid to you. It is you to decide what to do with the dividend. You can receive dividend, put in MMF. When MMF interest is enough, withdraw, return to shares, or move to a education plan or insurance savings plan. Or if it is enough for bonds, move it there. So that's how you rotate your investment. Dividend paid to you. If you have another account, maybe for a child, put it there. Rotate your wealth as much as you can. Have so many investment products you are putting money into. Any other question? If there is no other question, it's what time? It's 3:13. I would like to call it a day today. Tomorrow we don't have a class, but I plan once I'm comfortable with Forex trading and CFDs. Maybe that we can do over the weekends. Weekdays, Wednesdays, NSE, Fridays, international stocks and ETFs. If there is a high demand on the other products, I will also be happy to move them over the weekend, because I would like you to understand the investment horizon so that you know where your money is safe. Where it is not safe, then you know what to do with it. Like Forex and CFDs, I've so told you they are not safe, so you need to be active. Those are actually not for old generation, no? Those people who don't have time. And if you are not risk averse investor, Forex, CFDs, leave the young generation. They have time to lose and they have time to gain. No? You move to safe havens, wealth, stocks, ETFs, capital growth, bonds, they are good. Money market fund, short term. Bank savings, insurance, you can do that savings plan for your future. And as you move out of this training, start a pension for your retirement. So that when you are paid that pension on your retirement or when you leave your current employer, bring the total of it in and buy more dividend stocks, so that in your retirement, the pension, you are not using it, you're using amount paid in dividend from those pension. Thank you so much, and I appreciate your time. You're also one in a million for attending this training. June and the rest. Let's meet next time and have a lovely weekend. Reach out if you have any question and any issue. Even if you are stuck with an email that have not been responded, reach out. I appreciate your time, and let's meet next time. Thank you. I will share this presentation hopefully before the end of the day on those channels. Video, since there is no much of data I'm hiding, there is no much of editing. I might share tonight or very early tomorrow morning, and feel free to share with others. Thank you, and let's meet next time.